The legendary Warren Buffett, also known as the Oracle of Omaha, and chairman, CEO of Berkshire Hathaway, suffered a devastating loss of $44 billion in investments during quarter 2 and quarter 3 of 2022. It's a heart-wrenching reminder that even the most successful investors are not immune to financial setbacks. If your financial portfolio is performing poorly, stick around until the end of the video to find out how you can make a profit in a bear market. The loss, which occurred due to various factors such as market changes and economic conditions, was a shocking blow for Berkshire Hathaway, the company led by Buffett. Stocks tumbled into a bear market during the second quarter after aggressive rate hikes from the Federal Reserve to tame soaring inflation that sparked fears of a recession. Despite this loss, the company still managed to generate $76.2 billion in revenue and had an operating profit of over $11 billion. Most of this loss was only on paper and did not reflect the company's actual financial performance. In fact, Berkshire Hathaway made a small profit of $32 million on stocks it did sell during the same period. While the loss was mainly due to a decline in the value of its investments on paper, it was not an actual loss of money through selling the investments at a lower price. Tragically, some stocks had a greater impact on Berkshire Hathaway's net loss than others. The company's large stake in Apple, which made up nearly 43% of its total holdings at the end of quarter 1, contributed significantly to the loss.
It just feels astounding to watch a stock trade like Apple where it was to 96, 82. Do you really expect it to reach those levels at some point? I mean, what's the probability in your mind that that happens?
Berkshire's increased stake in Apple led to a negative impact on its financial performance, despite a 22% decline in stock value in quarter 2. But it wasn't just Apple that caused Berkshire Hathaway pain. Bank of America, Berkshire's second largest position, comprising about 10% of its portfolio, also took a hit. The bank's shares declined by crushing 24% during quarter 2, further contributing to the overall loss. Apple, Bank of America, and American Express accounted for 60% of Berkshire Hathaway's holdings and were significant contributors to the company's poor quarter 2 performance. Before his shareholders began to panic, the legendary investor said, "The amount of investment losses in any given quarter is usually meaningless." Buffett, a proponent of long-term investing, was referring to the strategy of not emotionally succumbing to an asset's unrealized loss. An unrealized loss is a paper loss that occurs when the current market value of an asset is lower than the cost at which it was originally purchased. An unrealized loss does not affect the investor's financial statements or taxes until the asset is sold. At that point, the loss would be realized and would be reflected in the investor's financial statements and taxes. The significance of an unrealized loss is that it indicates that the value of an asset has decreased since it was purchased. This can be a cause for concern for investors who are holding the asset for the long term, as it means they may not be able to sell it for as much as they paid for it. Investors who are holding the asset for short-term gain may see an unrealized loss as an opportunity to buy more of the asset at a lower price. How to make money in a bear market. It's difficult to say which specific stocks are undervalued and not affected by market downturns, as the stock market is constantly changing, and the value of individual stocks can fluctuate based on a variety of factors. Some sectors that tend to perform well during market downturns are considered defensive sectors, meaning they tend to hold up better during economic downturns. Some examples of defensive sectors include consumer staples. These are companies that produce and sell basic goods such as food, household products, and personal care items. Consumer staples often have strong brand recognition and consistent cash flows, which makes them less affected by market downturns. Utilities. These are companies that provide essential services such as electricity, gas, and water. The utilities sector tends to have stable cash flows and are regulated, which can provide a cushion during market downturns.
All nurses to the nurses station.
Healthcare. This sector includes pharmaceutical companies, medical device makers, and healthcare providers. Healthcare companies tend to have consistent demand for their products and services, which makes them less affected by market downturns. Dividend-paying stocks. Dividend-paying stocks are companies that pay out a portion of their earnings to shareholders. This can provide a steady stream of income for investors and can be a good option during market downturns, as it can provide some stability to an otherwise volatile portfolio. It's important to note that past performance is not indicative of future results, and that it's important to conduct thorough research before investing in any stock and diversifying your portfolio. Always consult with a financial advisor or investment professional to help determine which sectors or stocks may be appropriate for a particular investment strategy. If you enjoyed this informational and educational content, make sure to watch next Financial Myths We All Believe Were True. Thank you for watching.